Hey guys, welcome back to the channel. Brad here. So today I want to talk about how to profit from a recession. Now in the last week or so we've seen the stock market bounce back from its 3-week tumble. It's hard for me to imagine that things are just going to keep getting better in light of what's happening with jobs, what's happening with people staying at home and not really contributing much to the economy. So let's talk about, how can we improve our financial situations during a recession? So what Buffett says is there are two things that he would teach in terms of how to be a better investor. The first is knowing how to value a business. And the second is knowing how to think about psychology, in the stock market, how to understand market psychology. So let's talk a little bit about the difference between the price of a stock and the value of a stock. So the value of a stock is basically, looking at the financials of the business that stock represents. A stock is really just a partial ownership in a business. So we're going to be looking at what is that company bringing in terms of revenue and profit, earnings, and what are they spending? What are they putting out? And you're going to want to look at what that situation is years into the future. Obviously, we don't know that, but we can make educated guesses about what that business is going to be earning and spending in the foreseeable future. And then you would discount those numbers back to today using an appropriate discount rate. And it can be fairly in-depth. Aswath Damadran is a professor at NYU. He teaches business valuation. I actually took an online business valuation course from him. He's very thorough. I really appreciate his approach to valuation. But there's a lot of different ways to value businesses. And I say the most important thing when it comes to valuing businesses is understanding the different probabilities of what's going to happen in the future with that business, okay? There's not just one course that business is going to take. There's a lot of different things that can happen in our economy, in specific industries, and it helps just to have some idea about what could happen and assign your best guess in terms of probabilities of how those events may unfold, and incorporate those probabilities into your valuation. And when it comes to valuation, you're not going to come up with a number like $451 a share that's going to be right. Okay, you're always going to be wrong when you're doing valuation. The idea is not to be right, it's more to give your best guess in terms of what that company is worth, value per share today. And we really want to buy with a margin of safety, which is, the discount from that value that we come up with. So we want to buy when the price is significantly less than the value. I really don't like to buy unless the price is at least 33% less than the value that I come up with today. And there's two companies that are at that point now. Well, Uber isn't anymore. So right now it's just GrafTech. But I have another video where I talk about my top 5 stocks to buy now. So check that out if you're interested in that. So there's the value, which we just talked about. And then there's the price of a stock, which is what you see in the stock market. If you're in your TD Ameritrade account or your Robinhood app, you can look at Uber or Facebook or whatever it is and see what the price is right now. Now, value has some effect on price. The numbers matter when it comes to people deciding what price they want to buy and sell at. But there's also, human emotion that's involved in determining prices. Now, the stock market is an auction market, okay? The buying and selling of investors like you and me are what determine the price at any particular time. And so the emotions behind those investors, I posted on LinkedIn a couple days ago about what influences investment behavior. And so here's all some of the things that are working behind the scenes to influence whether an investor is going to be buying or selling. You've got greed. When the markets have been rising for a long time, you want to buy because you see all these people making money. You see the markets go up, and you don't want to miss out. So there's greed acting. There's this desire for money that makes you want to buy. There's fear. So when the market has been dropping, like it has in the last month, you've got people who are selling, not necessarily because they're comparing the price to the value of a share, but because they're fearful of losing money. When you see the prices dropping, it's easy to think, oh, I'm losing money, right? Because you see your portfolio dropping. And so there's that fear that gets people to sell at the wrong time. The willing suspension of disbelief. So if you want something to be a certain way about a business or the price of a business, and the reality is different, people can have a tendency to go to a place of denial or suspend belief about what's happening, and that can cause irrational behavior in markets. Tendency to conform to the view of the herd, right? So say you have a position about a particular company. You think it's worth a certain amount, and this is your outlook for it. If the reality in the markets goes long enough against your view about the company or about your view of the future of the company, you may be inclined to change your view and conform to the herd, to conform to what the majority of investors think about that company. It can be hard to maintain a position on a company that's counter to most investors for very long. And so that's a tendency to conform. And you've got envy, you've got ego, you have capitulation. You have all of these psychological influences that are acting on top of a rational valuation for a share of stock. And that's kind of human behavior that really impacts prices in the stock market. Usually a good way to look at value versus price is value doesn't change very fast. It takes a while for business projects, business investments to play out in order to impact the actual value of a share of stock. Okay, it takes often months or years for business value to change based on changes in a business or changes in investments or projects within that business. But you see, prices can move really quickly. Within the last 8 months, I think Tesla was at, it got down to like $177 per share, and it went up to like $960 per share. Now, the business value didn't change that much, and it's actually really cool. So this professor that I was telling you about, Aswath Damodaran, he actually valued Tesla at around $180 per share. And then 6 months later, when the stock had gone up, in the 900s, he valued it again, somewhere around $420 per share. So, the value changed quite a bit in that time. What is that, like 2.5 times? But the price went up 5 times. So that gives you some sense of how, when you overlay human emotion and irrationality, how the prices can fluctuate much more wildly than the underlying business value of a share of stock. So really the way, back to what we were talking about in the beginning, the way to profit from a recession is to have a list of stocks, a list of businesses that you really want to own. Have your best guess of business value. What is a share actually worth for those businesses? Not the price, but the value, according to what the business is doing, the financials of the business and the financial outlook of the business. So you've got your spreadsheet, and I have a spreadsheet like this, where you have, businesses you want to own, the value of a share of stock, and then, you want to have some discount, some margin of safety, the price you want to buy those shares of stock at, which for me, like I said, it's about 1/3 less than the business value. And then you wait for those individual stock prices to drop down to your buy price, considering your margin of safety, considering the discount that you need to have as an investor to be able to invest in those companies safely and profitably. So, like I said, guys, if you want to see, what's on my buy list, I've got my top 5 in a previous video, and I'm going to be making a lot more videos about this. So if there's any companies that you're really interested in owning and you're not really sure how to value them, let me know in the comments. What companies are you excited to own? Why are you excited to own them? And let's try to come up with some kind of reasonable value for the company, so you can have that buy price in mind as, we're in this crazy, volatile market. It's great to be a buyer when there's so much volatility, because the price can fluctuate so much and actually drop down to your buy price. So that's all I wanted to share, guys. How to profit from a recession. Price versus value in stocks. Critical to really grasp that. All right, guys, if you like this kind of content, hit that subscribe button. Smash that thumbs up button. Give me a like if you liked this content. I'm going to be making videos related to this, similar to this, every day. So I look forward to spending more time with you in the near future. All right, stay safe out there. Bye.